Holy flippity flip flap flop and smokes, everyone. This crazy housing market, this crazy housing boom that has been completely off the charts has officially come to an end. What you have to know is there's been a huge shift in the housing market. And like all the housing bears have been predicting that there is going to be a big housing correction coming. Well, it hasn't come yet. People have been getting impatient. People thought it would never come, but people, I can confirm, the housing boom is over and there is about to be a big shift in the housing market towards the downside. In this video, I'm going to be going over the US housing market and I'm going to be going over the new data that proves we're about to see a big shift in the housing market, and over the next 3 months you're going to see a big change in sentiment from huge amounts of FOMO to huge amounts of get me the hell out of here. Okay everybody, let's not waste any time. Let's get straight into it. So have a look at this everyone. Housing boom is over as new home sales fall to pandemic low. Listen to this everyone. Sales of new single family homes fell to an annualized rate of 676,000, 6.6% below May's rate of 724,000. And guess what? It's 19.4% below the June 2020 level of 839,000. So this is a big reductions of new home sales and this is a big shift. Now this is compared to what the market expected. The market expected an increase of 3.4%. And so the median price of a newly built home in June rose just 6% from June last year. So year over year, house price growth is slowing, from crazy. I've seen anywhere between 15 and 23% year over year house price gains. Well, now it is starting to slow. But this new data piece that just came out, everybody, this is the data piece we've all been waiting for, because what you have to know that's been fueling this crazy housing market boom is low inventory. And when there's low inventory, that creates crazy bidding wars because people don't have many options. So when there is one nice house in their suburb and there's a lot of buyers, they have to get in a crazy bidding war to secure that property. But now we're starting to see a big uptick in inventory. Look at this everyone. The inventory of new homes for sale jumped from a 5.5 month supply in May to a 6.3 month supply in June last fall. It sat at a low of just 3.5 months. What you have to know is everybody, in April, we're at about a 6.6 month supply of houses on the market. And then what happened? It absolutely collapsed. And then there was only around a 3.5 month supply of homes on the market from June 2020 to around February 2021. And that's what created this crazy housing market and this bidding frenzy, because there was not enough homes on the market. Now, what you can see here, look at this. From March, there's been a huge uptick in supply. We've gone from around 4.2 months to 6.3 months. But what you have to know is during the last downturn in the housing market in the United States around late 2018, when interest rates started to go up, that was when the Federal Reserve increased the cash rate to around, or the federal funds rate to around 2.25%. Look, you can see here, inventory went up to 7.3 months. So if we see inventory go over 7 months, that's when you're going to see a housing market downturn. You can see here a good healthy housing market is around 5 to 6 months. That's a bullish housing market. But once it starts going over 7 month worth of supply in the market, that's when you see house prices start going down. And then that's when the buyers' power goes back to the buyers instead of the greedy sellers. Okay, so it says here, most of the home buying is on the higher end of the market and builders cannot afford to put affordable homes up due to the skyrocketing construction costs. But there's also good news for construction costs. Lumber prices have been collapsing. Look at this, everyone. We can see here lumber. It absolutely skyrocketed in 2020 and 2021, and it hit a high of around $1,700. But as you can see, it completely collapsed all the way down to around $485 or $495. And it's now hovering around $600. So that means lumber prices, the retail prices, it's going to take a little while for it to flow in. But then that means the retail lumber prices will go down, and hopefully it'll become more affordable to build a home. And if it becomes more affordable to build a home, then more people will build instead of buying existing. Something I always talk about with the housing market as well, something that's so important and pretty much the most important indicator for the housing market is interest rates. Let's have a listen to what happened to interest rates in June. So buyers in June were also hit with higher mortgage rates, which spiked about 0.25% point during the month. While it may not sound like a lot, if buyers are already stretched by higher home prices, they have less of a financial cushion to absorb higher mortgage rates. And so, what has the Federal Reserve hinted that they're going to be doing next year? Well, looky here, everyone. Fed's WOA 2022 rate hike possible and wants mortgage-backed security taper first. So this could end up being a perfect storm. We're already seeing inflation's getting out of control. The Federal Reserve said it was going to be transitory. Well, actually, month over month, we just saw the biggest increase in June of 0.9%. So inflation pressures keep getting higher, and the Federal Reserve has to lift interest rates in 2022 when we got supply increasing. Well, then that's going to be pretty bad for the housing market. And we've also got some more data, which will be bad news, which we'll get into in a moment. So it says here, we're shifting our tone on the housing market based on our analysis of proportionally data showing early signs of a cool down according to the note. But guys, if that wasn't enough to convince you that we are going to have a housing downturn, now again, not every state will be affected the same way. All states have their own housing markets. The United States isn't just one housing market. You have to really do your research to get down to your area, because some states may be crashing, some states may be booming, and even individual suburbs will perform differently and individual cities in the states will perform differently. So people, this is also happening at a time with the moratorium ending, and more than 8 million households will face either foreclosure or eviction. So what you're going to see is a lot of tenants, unfortunately, may get evicted from their landlord, but also we're seeing a lot of landlords, they're getting fed up with not being able to collect rent. And what you have to know is, even if they've got, a mortgage holiday or they don't have to pay their mortgage, they've still got maintenance costs, insurance costs, property taxes, and many more fees. So they can't really just afford not to collect the rent. It's really a bad situation for everybody. And also these people that have been able to defer their mortgages for, a year and a half now, well, they're going to have to start facing the music, and they're going to have to start paying up now. And this is going to add more supply to the housing market. And what you have to know is really markets are fear and greed. We've had a lot of greed in the market because prices are going sky high, but sentiment can change very, very quickly. And, if all of a sudden you're a buyer instead of, one house, then you've got 3 houses to choose from. You don't feel that urgency to pay, like what we've been seeing at the moment, people paying $50,000 over asking price. But wait, there's more. Also, the story of 2020 and 2021 is money print to go burr and the money supply absolutely skyrocketing, which it did. As you can see here, the money supply, the M2 money supply, it increased from around 15 trillion all the way to around 20 trillion. But as we can see here in the last few months from March, it's pretty much flatlined here, and we're not seeing this crazy credit growth. And we're seeing lots of things like Wells Fargo, they've been shutting credit lines, and we're seeing banks being very, very selective with who they give a mortgage to. So why do you think banks will be doing that, people? It's because they know that there is going to be a change in the housing market. We've got these moratoriums coming to an end. We've got housing supply coming onto the market. It's looking like interest rates will go up, but who knows what could happen. We could see a shift in the economy. Maybe they won't go up. But then also throw in another spanner in the works. We've also got COVID cases rising in the US with the Delta variant. So then that's going to throw another spanner in the works. If a lot of people that are, trying to pay their rent or trying to get more work to pay back these mortgages, if they get laid off, well, then that's just going to be disaster. So everyone, although it seems like, the markets will never crash, the housing market's never going to crash. I'm not saying there's going to be a big crash, like 40% crash. But all I'm saying is there is going to be a big shift, and there are lots of risks. And, things are very bubblicious right now. We're seeing a lot of comparisons to this housing market to 2007, 2008. Although I will agree it's not as bad as them, there are some similarities with the amount of FOMO and a crazy price appreciation. So again, I do think it's very risky to get in the housing market at the moment. Not financial advice. If you need a home, you need a home. But I do think over the next 3 months, we're going to start seeing a big slowdown in house price growth. Hopefully we'll get some more supply. And then hopefully, if you've been dying to get a home over these past few months, hopefully some more options come on the market for you. So everyone, again, that was just some of my thoughts and opinions on the housing market. That was just me showing you the facts, the data. You need to make up your own mind. And because everyone's financial situation is different, if now's the right time to buy for you, again, nobody can predict the market to exactness. Who knows what could happen in the future? There could be more stimulus announced. The Federal Reserve could all of a sudden go into negative interest rates or start printing more money, or interest rates could be dropped. Who knows what the government will do to keep this crazy housing boom going. But right now, with the current data, things aren't looking good. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you up to date with the latest that's happening in the US housing market, the stock market, and global finance news. Now, if you're bored, I'll put up some other videos here. I'll see you all there.